In order to succeed, you must fail so you know what not to do next time. Anthony J. D'Angelo. My friends, it takes a while. You'll have great time periods, you'll have bad time periods. You'll go through all sorts of things to see just how much you want this knowledge. Stick with it. You can do it. I'm your biggest fan and your biggest supporter. The reason that not everyone can do this is because people don't stick it out. I find over and over again the most lacking of human qualities is perseverance. Perseverance. Every great person you hear interviewed, you will find over and over and over again, surprisingly, how much adversity they had to overcome. Now, all we ask is 10 to 15 minutes a day. I always start the broadcast off talking about this stuff. Why? Because you got to hear it. Nobody else is going to give it to you. Everybody's going to say, pay me, pay me, pay me. I'll give you a shortcut. It's not a shortcut. There aren't shortcuts to greatness. It is a slog. Every day, all we ask is 10 to 15 minutes and not more. You spend too much time, you'll burn yourself out. So just commit yourself to the show. Fill out the daily market worksheets. On Fridays after the market closes, we record the weekly review and forecast. Fill out the weekly market worksheet then. And then when you do your practice trades, fill out the trade worksheet. It's just that easy. I'm going to put at the end of today's video all 3 of those trainings on how to use those worksheets. Worksheets are in your show notes every day for free. They're PDFs. You can print them out. You don't have to buy anything. If you want a bound version, 3-month versions, you can buy that from us, but we give you the worksheets and everything for free. You don't have to buy anything here. This is done as a service to you. It's my payback for all the good things this has done for me. So, my gift to you, friends. Now, let's jump into these charts. What do we see going on? We see stocks down for the day, bonds down, gold up, hardly, 0.01% up. Bitcoin up almost 1%. Let's jump into, and that's not much for Bitcoin. You guys know how it surges back and forth. Let's talk first about the S&P 500. We can see that we have reached a high this week of 394.17. Last week the high 392, so it's up a couple of bucks as far as the prior highs go. Price percent oscillator flat, derivative oscillator flat. Have a green up candle, not as big as the prior candle, but it is higher, as is the wick on top. Go to the 2-day. What do we see there? Well, we saw the Tuesday, Wednesday up, but this latest Thursday, and again, it will finish drawing on Friday. Maybe we'll see an up Friday, but look how it just blew through the 2-day trend line. Hasn't crossed over going down, but the price percent oscillator is headed down. Derivative oscillator still gaining upward momentum from all those prior up-moving candles, but a significant blow-off as far as the Heikin Ashi candlesticks go. So it's showing some weakness. Like I said, it's only down 0.43% for the day. Price percent oscillator, again, still positive. Look at this half-day chart. Crossed over going down on Wednesday. Slid side, that's in the morning, slid sideways in the afternoon, then down on Thursday morning, and then sideways on Thursday afternoon, recouping a little bit of those losses. So we'll continue to keep an eye on things, just see what's up with stocks. Let's go from the S&P to the Qs. That's the NASDAQ 100, the tech stocks, again reaching a higher high. We also see the candles about flat, almost flat with each other. Again, we had that weekly vertical crossover back on the week ending the 5th of February, and we see flatness. It's almost, I mean, it's been, look at, we go back in time all the way to December. It has just been laminated the whole time. Market has continued to move up, but you'll see on the 2-day chart why we have such a crappy price percent oscillator. Usually, you go back in time, you see how fabulous the price percent oscillator has been for us on the Qs. But here lately, very crappy. Why is that? We'll talk about that in just a second when I get to the 2-day. I can show you better on that. Price percent oscillator, though, still positive, but flattening, heading down a little bit, it looks like. Derivative oscillator losing upward momentum. They're still positive, but weak. Look at this 2-day, trying to cross over, going down after, what is that? 12 days of up movement, of moving up, and then just crashing over on Thursday with a red down candle. Looks like that price percent oscillator may end up on Friday, if it's not an up day, could cross over going down, which would most definitely take you out of the trade if you didn't already pull that position if you were practice trading it. Derivative oscillator positive, but losing momentum. We go to the half day. Of course, that crossed over going down back on the afternoon of Tuesday earlier this week, then really hammering down Wednesday morning and, gaining a little, pulling up a little bit in the afternoon, then hammering down on Thursday with a little bit of a pullback. Again, only down for the day 0.44%, but showing some significant weakness. Never been super strong. Now, what I was talking about why that weekly price percent oscillator has been so crappy since December, you can see where it runs up for a few days and then peters off and drops, then runs back up, then drops, then runs, well, it doesn't really run up there, just sort of slides sideways, then popping up down. So what happens is, not having a good solid trending through there, you end up getting that lamination of the bigger chart, which makes it harder and harder to see what's going on. The good news is you don't have to trade stocks when you're having a hard time seeing what's going on. You can switch over to something like bonds. You can switch over to gold. You can get out of the index. Whatever is not working, then you don't trade that. You trade another. That's why we follow these 4 big ones, because there's almost always a trade somewhere. Okay, that is where we are on stocks. We're going to now go to bonds. Bonds down for the day, 0.40%. We'll talk about a trade being somewhere. Of course, it's in bonds since we had that 2-day recross. We'll look at that on the 2-day chart. But we can see where the down movement is accelerating as far as the candles, price percent oscillator, and the derivative oscillator on that weekly chart. 2-day chart. We had that 2-day recross going down back on the 3rd of February, jumping in point somewhere around the 150.25 mark. And what's the low so far? 144.32. That's beautiful. That's beautiful in just a few days. Price percent oscillator heading down, derivative oscillator heading down on that 2-day chart. Half-day chart, we saw things really cross over going down strong back on Friday the 12th in the morning. And that was the 12th of February, the recent 12th. Hammering down for 2 days sideways and then down strong in the morning on Thursday, pulling back a little in the afternoon. So that's where we are. That 2-day recross treating us quite well. It took it a while to set up, admittedly, but going in the right direction. What about gold? Gold about flat for the day, up 0.01%. So, 0.1%, not much. What do we see for the week? We see that price percent oscillator hiking over, going down, derivative oscillator gaining downward momentum. Red down candle. Gold just not in the cards for pulling up yet. 2-day chart. Of course, we had that 2-day recross back on the 14th of January. And again, we had that next 2 days were pretty good. And then what did we see happening? Well, we saw things slide sideways for a while, then accelerate down starting on Wednesday, Tuesday, and Wednesday, the 2nd and 3rd, then down nicely on Thursday, Friday, the 4th and 5th, then sort of sideways. And then this week, mostly down. So that's looking okay. That's the 2-day price percent oscillator, again, heading down, derivative oscillator gaining downward momentum. What do we see on the half-day chart? Well, we can see for 2 days of strong movement, this latest day losing some of that momentum, not hitting the low that it hit in the morning on Wednesday, the 17th. We'll see where gold is, if it's just catching its breath before it plunges more, or just what's happening. That's where we are on our 4 big charts. Now, for those of you who are Bitcoin fans and you want to learn how to practice trade Bitcoin, this is the place. What do we see going on the weekly chart? We see the Green up candle for the week, quite nice as Bitcoin has accelerated up some this week. We see the price percent oscillator heading up, pulling away ever slightly from the signal line. The derivative oscillator, still just a wee bit negative. Waiting to see when that's going to flip over. Maybe it could happen on Friday if Bitcoin sees some action. We look at the latest 2-day chart, first day of the latest 2-day candle, moving up nicely. Price percent oscillator nonetheless is fairly flat. Derivative oscillator heading up. We had that 2-day recross back last week, and that is, again, served us quite well. We told you as it was setting up to watch for it, and of course, it's treated you quite well. Let's see, somewhere around the $42,529 mark to a high of $51,314. I'm sorry, no, that's not even the high. $51,545. So that's nice in just a few short days. And of course, we can see some lamination on that half-day chart as it is moving up slowly but surely. So nice to see in Bitcoin. Again, not much movement in Bitcoin as far as Bitcoin goes, up just under 1% for the day. We would consider that great in stocks many times, but not much for Bitcoin. But nonetheless, heading up. That's where we are at the end of the day on Thursday, getting ready to go into Friday. God bless you, my friends. All the best. Hey, thank you for all the book purchases. Purchase Stock Trader's Journal, which of course is the compilation of 3 months worth of daily market worksheets, weekly market worksheets, and trade worksheets. Get a discount if you buy a year's supply of those. Thank you so much, my friends. Appreciate all the book purchases too. God bless.